you do the right things, you have the right to do the right things, but you're not entitled to anything. So that's what carries me.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Welcome to another episode of Path to Passive. My name is Steven Narita, and I am your host. My next guest I'm super excited for. We're in one of the same masterminds. We get to learn all about real estate, raising funds, etc. And I knew that I had to talk to him when I saw in one of the chat rooms some of the amount of money that he's raised and the way he's been able to contribute that back to his investors and community. So I knew I had to get him on the podcast to share the value, share experience. And so my next guest is a managing partner at Goldstone Capital Ventures, a real estate investment firm that has over 1,600 multifamily units in the portfolio, 120 million assets under management, over 50 years of combined investment experience with assets in Texas, South Carolina, North Carolina, and more. He's an experienced real estate investor with over 10 years of multifamily and single family acquisition asset management experience, for 25 years of experience in software product development and technology management for clients across North America, Europe, and Asia. He's actively involved in nonprofit organizations, has implemented global grant and district grant projects in India and USA through Rotary International, and has achieved and obtained an MBA from University of Maryland and has an undergrad in engineering. So Dinesh, thank you so much for being on today's show. Appreciate you having you here. Let's get into it. So for those that don't know you yet, I'd love to just tell us a little bit about your background. Tell us a little bit about, how you got to where you are today.
Yeah, Steven, I'm so glad to be here. Thanks for inviting me to your podcast. Yeah, I grew up. I was born and grew up in India. And I moved here in 1995 to the United States. Before that, I came from a lower middle class family from a village in India. While growing up, I have seen all kinds of hardships. There are little kids dropping out of schools in their middle school or high schools. I wanted to do something for those kind of kids, underprivileged kids. And basically, I had that in my back of my mind. I completed my engineering in India and then started my career there. I moved to United States on job. I got my MBA later on. But while working on technology for years, I gained a lot of experience. I started as a software engineer, but as I grew in the same field as a team lead, project manager, and at different management capacities, and grew into a lot of different roles, I was able to connect with a lot of different types of people, the vendors, our clients. There are a lot of partners I had to work with. So all that basically contributed to my personality growth. At the same time, in 2013, I started investing in real estate in the United States. Before that, I was investing a little bit back in India. In 2013, I bought a single family, and I saw the fruit of the tax benefits, appreciation, equity build up, and mortgage pay down, and the depreciation related tax benefits. It was amazing. And then I started growing my portfolio over years. In 2018, I realized single family is not scalable. So I moved into investing passively in one of the syndications. So that was a project in Ohio. So I started basically, I wanted to build some passive income while I was working. My my biggest goal in my life was basically to do something about these underprivileged kids that do not have the opportunities. So I wanted to give back that way and build a good future for them. So to do that, you need a lot of money, you need a lot of time. So basically, I was trying to build up that time. So I started investing in multifamily syndications, and one after the other, you see the checks are and nowadays you get these deposits keep coming into the bank accounts. That felt really good, and then I moved into active role. I thought I could not do that working full time in technology. So even though I wanted to move along in technology area, I I switched to real estate full time a couple of years back, and I started doing my own syndications. So as you said in introduction, we have done about 15 syndications so far, and it has been growing pretty well. At the same time, I wanted to take my friends and family and colleagues along this journey and help them build that wealth as well as passive cash flow as well. So, there is a saying, Warren Buffett saying, the famous saying, if you can't find a way to earn money while you sleep, you will be working until you die. So,
yeah, that's if I remember correctly, I think that's a Buffett quote, right?
right.
And so, yeah, there's a lot of good stuff there, especially with wanting to do good, but knowing that you have to be able to take care of yourself, do well, so that you can do good, right? And that's also coming from a place of service, which is one of the things I loved so much about your story when we first connected. Was that I almost thought would be perfect for the title of the conscious investor, right? Like so much having the service in mind. We'll talk a bit about how you're doing things with Rotary Club as well, but digging into the story, you said you did some single family stuff first before you got into multifamily, right? Tell me a little about how you were working in IT and you did some single family first, and then you got in multifamily. Is that right?
Yeah, I did not really have any vision of building, a real estate portfolio per se when I started. I just, over time, I have been investing in stocks and retirement funds and all that, but it was growing. It was going okay. At some time, you lose some money and then you make again, and then you lose again. So it was not consistent. But at the same time, somebody said, why don't you invest in real estate? So I bought a townhome, and over time, I really saw the power of cash flow, power of tax benefits, as well as the appreciation. And then I started, I wanted to keep on buying more and more. And at that time, I was managing myself. But the best thing was I was buying all these newly constructed proper townhomes and putting really quality tenants. So my goal was to buy these properties in a good school district area and get really A-class tenants out there, and keep on doing that, every year, every 2 years. So I kept on doing that, and it even though say when you buy these newly constructed properties, first year everything is under warranty, so there is not much to do there.
Right.
All you have to do is you get a good tenant. So I used to use somebody else like a realtor to get the tenants. So since these are newly constructed properties, you don't have any maintenance or repair requests coming in, even though there will be some minor things that you could take care of that through local contractors. So then the process went on until I got to 7, 8, 9, 10, and I was listening to some podcasts. So got into multifamily investing. That was my journey. That's where my journey started into.
Got it. So it was actually listening to podcasts which made you aware about multifamily. That's fun. Got it. And what I love about that too is This is real estate for tech professionals, right? And that's why I think you're such a great, guest to be here to explain and your life story about this too. But in particular, is that one of the things that is really great about a lot of tech professionals is that we're used to getting into the weeds of things, the data, like building a plan and just executing on it. But even in your story there, and this has been a hard thing for me to learn too, but I'm starting to use it more and more, is to use the other vendors, other companies as well to help you out, so that and use their time while you can still do things like your day-to-day job or whatever it is. So using other people to help you service your assets, right, and grow your portfolio on the side while you're still working too, right? So leveraging others is the point I'm making. So I love that that you called that out. So you learned about multifamily from podcast. So tell me about some of the next steps that you did from there.
Yeah, at that time, it was, I think it was 2018. During that podcast, the syndicator was talking about their deal, their syndication. So it was in Ohio. So I just drove there from Virginia, and then looked at the building, got introduced to the sponsors, and I wired the money. And after a couple of months, I started getting these. You can see the deposits in your bank account. So that was kind of, it's kind of, you're a sleeping partner. You're not doing anything, but you're receiving the money. That was a good concept. So I kept on doing those kind of things in multiple deals, and that passive income kept on growing. So that was a real good concept. And then after that, I was thinking, why shouldn't I do that kind of thing instead of relying on the single family and limited partnership? Let me get into active role and buy my own properties as a sponsor, as a general partner. So that's where my general partnership. And also, when you talk about multifamily active role, you need to be really good at building relationships, and you need to have good partners. It's a team sport, basically. You need to have good property managers, the lender relationships, broker relationships, the contractors, CPAs, attorneys. There is a whole lot of people that come into picture. And then when you start syndications, you definitely need a pool of investors who can invest along with you.
Tell me a little bit about some of the first investors who did invest with you. You're talking about building your network, having those others. What was that like to work with some people for your first syndication?
Yeah, the initial investors that invested with me, they, I go for golfing, or I go for a lot of different activities. It could be skiing or playing sport, or going into professional clubs, some activities, or even working in community projects. So basically, when we mingle together, we share our experience as a real estate investor.
Yeah.
So they would, when I discussed this over years, they would have seen the progress I have made, and then it builds some kind of trust. And when I said, okay, there is a really good opportunity here, I'm investing. If you want to invest along with me, you can invest. So that was that's how I got them started. So a lot of people came along with me because there was a level of trust and accountability, and they knew me for a long time. So those kind of close network, close friends, they started investing with me, and then I kept on repeating that along different, further syndications.
Yeah, got it. So people that saw what Dinesh was up to, saw what you were up to, saw some of the results, and of course, hearing that time and time again while you were going for your golfing, going to your clubs, whatever, and talking about the results that you're seeing and that you were excited about, driving to Ohio from Virginia, and what is Dinesh up to next? uh, so one of the things that comes up a lot in conversations that I have as well with colleagues and other investors is the conversation around, well, I haven't gone and done any single family yet. How would I possibly start investing into multifamily or maybe other types of assets that they'd be interested in, right? But since we're talking multifamily, the question being is, should investors have to do anything in single family first before they would invest in multifamily deals?
Not at all. They don't have to do any kind of single family investments. So what I would recommend is they have to obtain some kind of knowledge about these projects. Especially the most of my network is number savvy. A lot of them are engineers, so they're pretty number savvy.
Right.
So they go deep dive into each and every project and look at the numbers. So that is very important for them. But at the same time, the long-term trust and accountability that we have built with them, that helps for sure. But at the same time, they look at the market, how the population is growing, how the jobs are growing, whether new employers are coming to that market.
Yep.
Is that property in a good area? They even go into Google Maps and look around if there is any crime, or is that a good area or a rundown area. So they do their own analysis, and I encourage them to do that, because I don't want them to be blindly investing with me just because I tell them.
Right.
So that's how I create that awareness and try to educate them, not only about the asset, about the market or asset, but also the current economic environment. In the last couple of years, things have changed drastically from week to week, month to month, in terms of interest rates, the labor, material, the insurance costs, the taxes, and they have gone. There is so much happening in the last 18 to 24 months. I try to keep them abreast of all these developments, and that helps to build that trust as well.
There's two really big nuggets there. The first one, that the direct answer you were talking about, is not having to do anything in single family, but being able to invest passively or as a limited partner, right? When you were previously talking about, being investing passively or doing something more active, right? And so you're saying that they don't have to do anything single family first, and they can directly invest in, but they should make sure that they understand the deal, they understand the market, they understand the economics. And that's one of the main reasons how the LPs, limited partners, and the GPs, or the active partners, or the operators, work together. So what are some of the how do conversations, what are some typical points that you like to talk to investors about, right? That, or questions that come up when you talk to them, right? Maybe what specifically about the market or around economics?
Yeah, there are always conversations. Over time we have pivoted into different asset types. We are also doing 2 new development projects as well. So there will be always questions about a particular deal or a particular project. And since predominantly we were in North Carolina market, and suddenly we went to Dallas, there was a multi-unit 44 that had a 44 unit long-term rental complex. Now we have converted that into a short-term rental property, so to increase the revenue, and the distributions are amazing with that property. So we kept on pivoting depending on the economic environment, as well as the opportunities and the returns that we can get to the investors. So it's basically, whenever we bring a new opportunity, we definitely go over the webinar, our presentation, and answer any questions they have at that time. For example, last year we also moved into student housing and assisted living.
Mm-hmm.
So they're amazing deals which we could not decline, and basically they fell in our lap. So we joined other experienced operators and brought our investors in. That was a So right now our buy box or our criteria has really become pretty narrow, and we are bringing only those opportunities where returns are starting from cash flowing from day one, and these are quality assets built in the last 20-25 years.
Nice.
And also the other thing is we want to make sure we have a solid boots on the ground team.
Yep.
In that near that asset.
Yeah.
So those are the couple of criteria we go by, and we convey that to those things to our investors, and to build that long-term trust, as well as they will also refer other people,
Mm-hmm.
and then they bring their friends, their family into these deals. That has been really helping us organically to build our investor database.
Yeah, certainly. I mean, that's building that trust too, and getting those type of results makes you want to talk about it, and creates raving fans as well, right, so to speak, as investors. And I love what you said there. You talked about your criteria. You talked about the buy box that you have for, hey, if this is the type of deal that we invest in, right, you and your team invest in, then it must meet this criteria for your team to go and actually acquire it, to consider operating it, because it has to meet your criteria for it to be something that you'll do right by your investors. And so I love that you talked about that. And also the, cash from day one. That's a really big call out. Sometimes some assets won't be doing, cash from day one. But I have a follow-up question, which is, you talked about a couple of different assets. Talk about, I think, student housing, senior assisted, and then some land development. These are all different versus how we started talking about going from single family to multifamily. So, if I'm a new listener and I'm listening at home, I'm thinking, well, there's a bunch of different assets. How would I know which asset to invest in with you? So how would you navigate? What would you tell that person asking that question? Hey, Dinesh, you have a bunch of different assets and opportunities. What do I invest in? How do I decide that? What can you tell me?
Yeah, it varies from investor to investor. Ultimately, we would like to, as a company, we want to create that awareness, create that education, and extend different types of opportunities to our investors. If they want to limit their investments to just one asset type, multifamily or student housing, that is fine. But at the same time, okay, here is greater opportunity, and this is how it works. Multifamily is a generic term. It can be easily applied to student housing or assisted living. It's in assisted living, it becomes there is more to do as far as day-to-day operations is concerned.
Mm-hmm.
In student housing, it's mostly seasonality, because in July or August month, the people start moving in and moving out, and new people moving in.
Right.
So, and the leasing period is totally different. Other than that, if you looking at the numbers, NOI is calculated the same way. All the possible gross income in terms of rents minus all the expenses you have to incur over the years, and that is your net operating income. And then your cash flow, what your debt service on a monthly basis, and then your cash flow is basically, that's the cash flow you get. So the concept is same. Asset type could be different, operators could be different, but we want to make sure we have solid operators on the ground, solid property management company is on the ground. Say, for example, if you go into C-class multifamily property, you go with totally a different property management company. They may not be expert. They may be expert into handling Class C properties,
mm-hmm.
but they may not be able to handling and to do the same thing in Class A properties.
Sure.
So unit size matters too. So that way we have the property management company for student housing, which is very specialized in student housing. Same with assisted living. In assisted living, you need a lot more employees there.
Mm-hmm.
But as long as you have a really good executive director who is responsible for day-to-day operations,
Yep.
they will take care of the most of things. So we are also moving into and looking into different asset types that brings more returns for our investors. Ultimately, we would like to, our goal is to basically bring a passive income to our investors, and then it's ultimately that's the service we want to provide. Asset type, it matters, but at the same time, we want to get our investors exposed to different asset types, different opportunities. We don't want to really leave something out because we don't know about it. So wherever we go, and we are learners. We keep learning every single day, every single week.
Mm-hmm.
So that's how you build these portfolios.
Got it. So just coming from a little higher level, so I can attempt to summarize here, you're basically saying that net operating income is net operating income. The income, that comes in from the property, the expenses that there are for, that property or that asset is, the income minus the expenses gives us net operating income. And then you have the debt service.
Yeah.
So independent of the NOI, you still have to pay the debt service. And from there, you're having profit from whatever that asset is. And that's going to be the same thing no matter what the asset is. Right. But you have different business models based on student, income, right? Based on senior assisted. And you have property managers that you've vetted and you've partnered with to make sure that they're able to execute properly, boots on the ground there for those. But at the end of the day, you as and your team have a buy box and criteria so that you provide that service of providing passive income. And that's the most important thing. Is that about right?
Right. So basically, when I started my journey into real estate, I was thinking, why did I not look into these many options just outside the work, right? Then when you look back, okay, I missed out on so many things. I don't want my friends, my family, or my family members or my colleagues miss on these things, and after 10 years they realize, okay, nobody told me these things. So I just want them to get exposed to these different kinds of things, and if they want to become active in this, I have been helping them as well in that aspect.
Awesome. Yeah, that's a really good point. I think we don't often get told about these things. We have to definitely go look for them or hear the right time to hear that podcast and think, et cetera, et cetera. We get, we're consumers of going to buy a single family house, and we've stayed in a hotel and we've stayed in an Airbnb, and one of our friends might have, bought an Airbnb or a house and turned it into an Airbnb. But how many people own hotels, right? But back in tech, right. And so it's kind of a different thing. So, pivoting a little bit while you're on that topic, I'd love to hear about, ask some questions that, again, these are questions I get from my colleagues and investors too. Of, real estate is pretty new for me, right? Especially if you're talking the commercial real estate side. We're not talking about a single asset. Like what makes me qualified to play in this space? How do my skills apply? Can you tell us a little bit about how your skills as, in tech has helped you along your journey?
Wow, that's a very good question, actually. Most of my colleagues, since I come from technology background, I am an engineer, so I dig into these spreadsheets and numbers.
Mm-hmm.
And also I go into these the Google or new AI tools to dig into the data and to get all the information about a particular market. It could be particular asset, surroundings, the demographics. There is so much analysis that we can do.
Mm-hmm.
That engineering background has helped me quite a bit.
Yeah.
But over the time, I have for me, people matter a lot. So I like to build that relationship with all kinds of people. It doesn't really matter what kind of person someone is. They will have good habits, bad habits. And generally, I look at their good attributes and then make friendship and try to build that relationship based on the good attributes of that person. So I have made a lot of friends that way, and it has helped me immensely, and it has given me opportunity to help them grow as well. I have seen that growth. So that has so over time, because of these relationships, you can apply the same concept or
Relate.
same skills.
Yeah.
Yeah, same skills to multifamily or real estate industry. So here you work with a totally different set of people, especially the brokers and the property managers on a daily basis, and the lenders whenever you require financing, and also the investors. So I like to uh, build those relationships with a lot of other people as much as possible, and help them grow, help them in whatever they want to be helped out. So that has helped me even during my, in my technology experience. Throughout the career, I have tried to help my team members, and even other my clients, my vendor partners. So in whichever way I could. So I use the same skills. I apply the same skills wherever I go nowadays in real estate industry too. So that has helped immensely.
Yeah. Diving into data problem solving, working
Yeah.
across quote unquote cross-functional teams, and, keeping track of things with, being part of teams and project management teams to deliver things. It all translates well. And, I've found advantages too. Just, I know there's certain people that are just like, I'm not, this is what they'll say, that they're not great with technology, and it could be as simple as Zoom or the latest, basic AI tool that is web based or something. And I'm like, it's,
Right.
this is our bread
Yeah.
and butter, so,
Yeah. Yeah.
it translates quite well. Cool. I love that you gave your background on that too. I do appreciate it because, it's a question that pops up a lot. But, I'd love to, unless there's anything else you want to add on there, I'd love to hear about some of the great work that you've been doing as well. Service-based. You've mentioned, your love for people and contributions and wanting to help out with, seeing people in different schools along the way. Tell us a little bit about where your heart's at too with, service. It could be wherever you want to start with that.
Sure. Thank you. So, thank you for the opportunity. Actually, when I was in middle school, this incident really struck me. When I was in middle school, there were two twin girls. They were so brilliant. Suddenly, they disappeared from school. And after a couple of weeks, I came to know that they dropped out and they were taken to a city to work in as housemaids. So I was I was really lucky to to be able to complete my complete my studies, whatever I wanted to do, and come here in the US and serve people. But that incident really that made me want to help people, especially the kids, underprivileged kids, to get through college. So I have done, as soon as I started my career, I started helping kids, especially the kids with single parent. I helped them to complete their schoolings, the college education. I started back in 1995, and then we have scaled that up through some nonprofit organizations here, and we raise funds to do that. At the same time, we have we have started building schools back in India in villages. So in one of the villages that I came from, We built, we had schools that were built back in 1930s and 1950s. They were falling apart.
Wow.
We have started a big 5-year project, which currently we completed the kindergarten, the elementary school, the middle school. Now we are looking at the high school building. So it has been going pretty well, and we want to get the best teachers placed there, as well as the best, the what are the computer lab, the sports equipment, all the
Yeah.
generally in villages in India or any other country in that area, they don't really have those kind of opportunities where we see them here. So they don't have basic facilities. So I would like to provide all that and then become a model, make it a model school, and then repeat that model in different villages. That is my personal goal. So that's why I wanted to buy more time doing real estate, and
Yeah.
I think it will help me in the long run. So, and also through Rotary International, we have done few projects, global grant projects back in India as well as other countries. We are now doing in African countries as well.
Wow.
We have these monthly or bi-monthly projects in local communities, doing quite a bit. And it also helps to build that relationship with our local community. And it has helped me personally as well. And it has, as a person, I have grown quite a bit because of all these endeavors.
Yeah. What are so the schools that are starting with kindergarten, elementary, high school? Those are some of the projects in India. Are those things that you mentioned those first? What those things are that you're leading, or on your side, independent of Rotary?
And that is, yeah, those projects are independent of Rotary. It's from a group of people.
Right.
So we came together and doing it. But I'm not doing much because I'm here. I'm just helping raising funds, and also I helped. I donated to build one of the buildings, basically. So there are boots on the ground. My brother is pretty active, and there is an organization doing it. Yeah, they're all part of one organization. There, I'm also part of that, and it's going pretty well. And we are already into 4th year now.
That's awesome. I mean, every hand plays a role there. Every part plays a role to get some of these things done. And like you're saying, that's doing things here too, so that you can have more money freedom, so that you can build more time freedom as well. Right? I think it's easy to forget about even if you have money freedom, so to speak. If you're doing something where it's still taking your time, then you don't have it from all of the important angles. So that's really cool. I commend you guys for doing that. It's good to invest because everyone wants the highest return on their investment and highest return on effort as well. But it's, what are you doing those things for, right? And so these are things that you have service. What are some of the other things, maybe personally, or it could be for you and your team that goes and puts together these investments? What are some of the values or things that are a focus and driving force for you?
Yeah, we want to educate people, educate investors as we go along, as we grow, and also create opportunities for them. And I am totally of abundance mentality. I don't really mind if my investors invest in other syndicators deals, but there are enough deals to be had. But I want to make sure they make the right decisions and not commit any blunders along the way. So that's the key for us. And we, at the same time, we engage with a lot of nonprofit organizations, and then we sponsor their any events. We go there, engage with them, and we get to know a lot of other people, new investors. At the same time, we try to help and educate the people, the guests that come to those events. Indirectly, that has helped us not only to build our brand, but also in creating a good network for ourselves.
Yeah.
So, kind of an ecosystem for ourselves. So we want to we want to grow that ecosystem for ourselves. And there is in Hinduism, we have this Bhagavad Gita. That's the kind of a Bible for us. So in that, one of the quotes is karmane vadikarastu mapaleshu kadachana. What it means is, you do the right things, you have the right to do the right things, but you're not entitled to anything. So that's what carries me, and I do not expect anything back. But there is recently I read a book, Go Giver, keep giving, then it comes back 10 times. So those things keep driving me, and at the same time, building a generational wealth and all that matters.
Right.
And but at the same time, we have to make sure there are a lot of generations before us. They came and they worked so hard to build such a great future for us, to create a nice world for us.
Right.
But we have to be grateful and do the right thing, keep doing these good things, so our future generations will think of us too.
Yeah. We have an amazing opportunity to stand on the shoulder of giants that way. The infrastructure, the technology, the platform that we're on right now, the ability to do these things, absolutely, for sure. And the giving that education, like you were talking about, and just the awareness as well for others too, so that they can reach whatever goals that they want to, and continue to build, so others can stand on our shoulders as well, much like we have done. It's kind of like being a good steward of the things in our life that we have, right? Not as eloquent, but but it's the way my brain is processing it. So you have a couple other partners as well, right? Just tell us a little bit about your team real quick.
Sure. We have this our organization called as Goldstone Capital Ventures. And we came together in 2020, Anchal Dwivedi and his wife, Shruti Dwivedi. So they live in Cary, North Carolina. Amazing people, amazing partners. They are quite driven. Both of them are triathletes, and they have completed their full Ironman a couple of times.
Awesome.
And pretty motivated, pretty driven. It's really a privilege to be partners with them, and we have been doing great things together. So we have a lot of big goals, so we are on our way.
Outstanding.
That feels good. Yeah,
very cool. It's one thing we think about the people that you and your team want to serve, and educate others, especially in the tech community, to be aware of opportunities like this, and to get, additional income through real estate. It's to be aware of it, to understand some of the strategies, knowing that, hey, these are the different assets, and here's what net operating income, or NOI, is, and it doesn't matter on the asset type, as long as the economics make sense. But some people still might not go ahead and invest because they might not be sure, or there might be emotional friction of, or even aspects of fear. What do you tell of those that are making their first investment, or their second investment, that they still might need more information, or still might be in that headspace? What do you tell them about making their first investment?
Yeah, I'm really excited for the new investors in this current environment. Commercial real estate, I think it's going to create a lot of new opportunities and great opportunities this year and beyond, especially in the next couple of years. I remember I always think, okay, we lost a great opportunity in 2010 to 2015 whenever we did not invest much in real estate, right? I think that will be the situation in 2024 for the next couple of years. But we have to get educated. There is somebody said, about risk. If you do not get educated, everything becomes risky, right? So get educated, get a lot of learn every single day, and do not get into something that you don't know anything. So start learning, get educated, and start investing in these properties, in these assets. You know what I tell youngsters is, work hard, make a lot of money, save a lot of money, and start investing, create that passive income, and where you can take care of your monthly expenses. Then world is yours, right? You can do whatever you want. You can take a break, travel the world. You can take a break, learn something else, go to school. So make sure you build that passive cash flow somehow. But to do that, you need that capital, and then save as much as possible. A lot of people, they as they start earning more and more, they keep on changing their lifestyle. So instead of that, just keep on saving as much as possible and start investing. And then after 3, 4, 5, 6, 10 years, you're totally independent. And at that time, you can do whatever you want.
Totally. That's such a good call out. Everything is risky. It's not that any asset is risky. It's only risky if you don't know what you're doing. So getting the education, of course, great place to start. And as you do, you're never going to be able to time the market. It's getting in the game and learning how to play the game, right?
Yeah, and this is a great time to get into this. Yeah, this is if you want to time, this is the time. That's what I tell people. Yeah.
Got it. So I know you have a love for people and you want to have conversations with others. Tell us a little about where they could reach out to you, have those conversations, ask questions, where to get started, whatever about the education.
Yeah, our Goldstone Capital Ventures, we are on all the social media channels, LinkedIn, Facebook, Instagram, X as well. Plus, you can go to our website called goldstonecapventures.com. And my email ID is dinesh@goldstonecapventures.com. So, feel free to contact us anytime, and we will try to help in whatever way you want to.
Appreciate it. I'll make sure everything is in the show notes, easy to access, and to reach out to you, Dinesh. Thank you so much for being on the show. Appreciate you, your team.
Thank you. Thank you so much.
Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.